weekly and monthly update for the Ames, Iowa housing market for September here, and going through here the first week of October. So we'll jump right into it, and then we'll jump over to the graphs to kind of show you where we were last year and the previous 6 years prior to this year as well. So hang on, because it's interesting stats here for the month of September that we don't usually see. So it might have some telltale signs here along with new construction. So anyway, we'll jump into it here. So active, we ended August here at 121 active listings. We're at 118 right now. Last year, we also had 118. So kind of interesting stat for September there. But when you go over to pending, 64 pended homes in Ames in September. That's a jump from 36. Closed homes, that's a jump from 35 to 52. And if you look at October here, October was higher last year at 43, but only closed at 38. So that's going to tell me that our October numbers for closings are most likely going to be quite a bit higher through October, November than normal. So that's something notable, definitely. I'll show you here in a minute when we get to the charts. But when you go over to the resale side, last month ended at 88 homes, sitting at 71 right now. This is the downward trend that you'll usually see, but because of so many pendings here, keep in mind, over the last month, we did see rates drop a bunch, and then they went back up. So even the end of August into September, we saw some rates, in the fives. So that little downtick, and then they went back up, into the sixes. But that little downtick made a big difference. And I don't know if that was all of the issue, but definitely made quite the impact there. So sitting at 71 resale homes, 7 townhomes, 1 condo, 63 single family homes, which is 11 less than we ended with last year at the end of September there. And then 35 new construction. So the new construction grew by 11 just in the last month. That's notable. And what that tells me is builder confidence is up. So builders are saying, okay, we see the tide's turning here. We need to get homes available for everybody in, coming here in the spring. I would agree with this. So I've been saying it for a couple months now that builders need to start getting foundations in the ground, get things framed up, finish them out through the winter, and then have them ready for the market in the spring. So those numbers, that was pretty shocking here with the 64 pending and the 52 closed. But it's possible that number keeps holding strong. So we'll switch over here to our monthly, and we'll start up here. So let's just look at active listings here. So sitting at that 118, still a high number, 147 that we had in 2020. You go up to 2019, 208. So we're still just shy of 100 less than we had in 2019. That's a big difference when it comes to active listings. So 18 into 19, if I had 18 on here, you would be able to see that there weren't as many homes. It would be more comparable down here to the mid 2020s, I would say. And it did spike up a little bit in 2019, right before COVID. And then the COVID effect happened, and that's what you get down here. But it is starting to climb a little bit. Hopefully it holds steady, but I would expect that February, March, April timeframe, a lot of that inventory is going to come off the market, and you're going to see a lot of homes changing hands. So we'll be paying attention to that. when you start looking at monthly closings, where we were, we're almost matching 2020. And the fact that we're sitting here with 21 and 22 being lower, the only reason these were lower is because inventory was so low. That's the only reason. If inventory would have been high at those times, this number would have been up here 75 plus. There weren't enough houses around. So now that we got inventory up, you see this ticking back up. So people having more options, they're going to go out, find the thing that they want. And a lot of people have just been on the sidelines for a while saying, what are rates going to do? What are rates going to do? Well, rates fell a little bit. Boom, they jumped on it. Just talked to a couple team members. They saw the last couple closings they had here last week. They were in the fives. So when you look at new listings, we're still definitely, I would say, higher than normal, but where we were in 22 with 35, but September, that's a pretty good uptick. 23 there at 71, which is kind of a little bit of an anomaly, but you can kind of see, okay, things are trending about the same. Here you go to days on market. This is kind of wild too. So we took a big tick down to 31. So even stuff that was coming on was just flying off the shelves, bringing that average down. So I would expect that 30 to 60 day range to be pretty normal as well still. When you look at absorption rate, because we do have more on the market, 2.7 months. Still, like I've said before, once we get into that, closer to that 3.5, 4, or above 4, then it starts to shift into more of a buyer's market. There are some cases, and people are saying, oh, it's shifting, because you'll see here in a couple slides that the list price to sales price, well, people are taking more of a hit. Well, people are getting more realistic as well. So with more inventory, people are going to start saying, okay, well, this isn't updated. This HVAC's old. This roof is old. And so they're going to come down quicker on some of those things if that home starts to sit on the market a little bit too long. So we'll be keeping an eye on this absorption rate. If we see inventory start to rise and we get back up into that 3.8 months, 3.5 to 4 months, then we'll start to make some shifts, but be paying attention. But in the end, the homes that are selling the quickest are priced right and priced well, so that mid to low range, because there is a big buyer pool out there still, so there is still high demand. But if you go mid to low range, you're going to get more offers and more looks. On top of that, have your house ready. So as you're watching this, as you're thinking about it, what should I do next? You might say, okay, we might be moving next spring, or we've seen some houses. And look, we got a lot of equity in our house. Should we make a move? Have us come over, take a look, walk through the house. If you're thinking about putting some money into the house, how much are you going to get back out of it? How long are you going to be there? These are all things that we can help you with, and we'd love to help you with them. It doesn't cost you anything but time. So you utilize us, use as a resource, okay? When you start looking, like I had mentioned before, that list price to sale price ratio, just below 97%. So still not terrible at all. When you start to look back here, when inventory was really high, that's when almost 94% of it. So people are taking a 6% hit on their property, 6 years ago. So that's something that, we'll continue to pay attention to. But a lot of these, they sat on the market, and then they took bigger concessions on some things. So people want move-in ready more than they want it to be a fixer-upper, more than they want to have to fix things. So get a hold of us before you start replacing your entire HVAC, before you start doing those things, because there's a possibility that if you had $20,000 in fixes, maybe that price only needs to come down $10,000 to get it very competitive, depending on your range and where you're at. So be paying attention to that. But if you have any questions, give us a call. just that's what we're here for. Love to help you out. If you want to talk about this further, about what the market's doing, about what the Fed's doing when the Fed's cut the rate, all of a sudden they cut the Fed's fund rate, but all of a sudden the markets reacted differently and they went up. I'd love to have that conversation with you guys and talk about jobs reports and all that in the CPI. So just let me know how we can help you better make your next move, so you have a better 30,000-foot view of what you're doing and where you're going, so you make the best move for yourself and your family. All right, that's all I've got for today, and hope you guys have a great week. Take care.